All right, so let's get started today. So yeah, just briefly went over some of the trading strategies, but let's look more into depth. So what is scalping, right? So when it comes to different ways to trade, if you are looking for trading at at a quicker pace, maybe like over a course of a minute or and within a day or 5 minutes, 15 minutes, that's called scalping. So that's when the weekly contract expiration date is more so in and out, right? So it usually expires in a very quick time frame. So you're placing multiple trades in one day in one time frame. So that's what scalping is all about. Next, we're going to have day trading. So when it comes to day trading, it's similar, right? So you're also going to look for weekly contract expiration dates, and you can stay up into that trade to the end of the day. So the time frame is not as short as scalping, is a little bit longer. So that's what day traders usually trade within that one day. So it could be a 5 minute, 15 minute, 30 minute, an hour, 4 hour time frame. And where you're viewing the charts, we'll go that into more depth as well. When we go into trading view, you can actually see how you can monitor like how that gets all set up. Next is really a swing trader. So you may have heard us reference, what swing is when it comes to options, and how you can, use this strategy if you're looking to position yourself in a contract that has a longer expiration date. So normally the expiration date is within like a week or month, but it really depends on how long you wish to hold and whatever your target price is, right? So if you get into a strike price and you're expecting it to move upwards and you're putting in a call position, you want that share price to be pretty high, right? And you want to make sure when you're looking at riding the trend, you're noticing that upward momentum of that stock price. So that's what the swinger trader normally looks for as well. So the next one is an overnight hold. So with an overnight hold, this is when you're noticing a lot when it comes to like news that you've done. So any catalysts that you see that came out, it could be like an earnings report, or these could just be even like weekend holds. So this is when like the stock market has closed, and a lot of times people are expecting there to be a change in that value to be able to go up overnight. So this could be a more risky, but again, it could also offer a lot of opportunity and a lot of rewards if you play your cards right. So essentially, you're expecting to hold the trade overnight and see it move in the direction that you're hoping for in that time frame. So it is high level. These are like some of the 4 ways to trade, depending on how committed you want to be as it relates to that time frame. Next, what I'm going to do is jump into some quick strategies. I mean, we don't need to necessarily really start applying these. This is just so that you can kind of get used to how some day traders or some people who trade options, what they kind of use. So we have something called a cover call option, right? So with a cover call option, it's like based off of the profit that you are looking for, you can see the change in the stock price. So with based off this profit and loss graph, if you see the stock price starting to increase, given that you're in a negative earnings position, the call is really meant to offset any long shares position. So that's what a cover call option strategy looks like. And you can just always take a note of these type of strategies in your participant workbook to just refer back to when you're looking to just get into a particular position as well. The next one is going to be a marry put option strategy. So has anyone ever heard of a marry put option strategy? If so, let's see if you just put like a check mark or 100 in the chat if you heard of any of these strategies. For just kind of, I just want to gauge where everybody is at. All right, so we getting some no's. All right, no's. All right, has everyone heard of a cover call option strategy? All right, cover call. Okay, we got some cover calls. All right, cool. So with the marry put option strategy, it's really a way to kind of mitigate a lot when it comes to like the risk, and you really can benefit from the net effect of having a long position on a particular stock, right? So with that long position, if a stock price falls, it limits the loss that you actually are exposed to off of this marry put option strategy. So this is just something that you can always reference, and then they can go back to and research more as you get familiar with doing some of the technical analysis and as you also paper trade. The next one is a long strangle option strategy. Has anyone heard of this one? Let's see. All right. No. All right, cool. We got one. Yes, we getting some. All right. Cool. Yeah. So these are some of the strategies, like, you just maybe just want to just like jot down, and you can always just just reflect on, like, which one works best for you. There's different resources that you can check out on to get more information about this. But essentially, this is when you're putting in a long put, and you have also a long stock position, right? And you use that combination. So if the stock price falls, you're limiting the losses as well. So these strategies help really, mitigate a lot of the risk and exposure of your capital when you are, trading options. All right. So the next one is a bull call spread option, right? So with this one, it's really the investor is simultaneously you're buying a call at a specific strike price, but you're also selling the same number of calls at a higher strike price. So this way you really are expecting a lot of momentum happening, with this particular this option trade. So if you're very positive on this, and again, you're a bit limited to, like, how exposed you are to, and then how much you can actually earn out of it. But this just gives you a sense on how you can also manage the risk as well here. And in a very similar vein is the bear put spread option. So again, like, based off of like how you are expecting profits to be yielded, you can see how you can, depending on like it's like the sentiment that you're expecting of the underlying asset. If you're expecting the asset price to decline, this strategy helps you really capitalize on that type of gain. All right, so that's really all the just a quick intro to some of the strategies there that you can start thinking about. I'm not going to dive too deeply into it. I just really just kind of want to introduce these strategies to you. If you're looking to do additional research, if it's something of them like stand out to you, depending on the research you've already done on a particular stock and how you feel it may move over the next few days or time period, depending on your trading strategy.